So MicroStrategy's average purchase price was a little less than 16,000, and right now, the price is about 33,000. So you've more than doubled your investment, and most likely by the end of the year, we're probably going to be in some kind of bubble, I imagine. So the return will be even higher. And you've said that you didn't buy the Bitcoin to sell it, but would MicroStrategy ever take some off the table when you sense the market is at a top, and then just buy in later when there's another correction? Or do you just plan to hodl through all the cycles, and weather those, whatever 80% downturns when the crypto markets are in a bear market?
Yeah, again, I just disagree with your characterization. I don't expect an 80% downturn. I don't think it's a speculative asset, and I don't think you can quote unquote take money off the table. You're speaking like a crypto trader right now, right? Yeah, I mean, maybe you're doing it just to represent their interest, but I don't see the world that way. I think that Bitcoin is sound money. It's the technically superior asset class compared to the dollar, the euro, the peso, the bolivar, compared to a stock index, compared to gold, compared to silver, compared to everything you can conceivably buy. It is technically, thermodynamically superior as an asset. So when you say things like that to me, and maybe you just do it just to see what I'll say back, I just imagine you preaching to me in Argentina while you're asking me if I'm going to sell the dollars and buy pesos back again as the peso sleeps from 20 to the dollar to 40 to the dollar to 80 to the dollar. Or if we're in, Venezuela. I mean, you think a Venezuelan company is going to quote unquote take some money off the table by selling their US stocks and their US dollars to buy back into local currencies? Or then, in Zimbabwe, you think they would take money off the table, right? The point is, if you have the superior asset, it's going up forever, Laura. Forever.
Right. I mean, right. But I mean, we can all look Bitcoin sort of as numerous investors have talked about it, kind of breathes, after having the next year and a half after it tends to go up. And then after it reaches some kind of bubble, it kind of sighs a little bit. And then, then after the next halving, we see it go up. But, so it's this kind of up and down cycle, but the overall trajectory is up. So, and it's not, on Twitter, people were asking me to ask you this as well. I think it's a perfectly, natural question to ask.
I think, I don't think Bitcoin is volatile if you're an investor. If you're a hodler, if your time horizon is 1 year, or if it's 1 year, you're a short-term investor. You can find 2 or 3 times in the last decade when it wasn't great, but it wasn't awful. If your time horizon is 4 years, you can't find a time when it wasn't working. So I think, just a normal, ordinary, responsible investor with a 4-year time horizon will look at it and say, this is very boring, right? It's exciting if you're a trader or a journalist, and if you're on Twitter, and if you want the news to change every day, people, and I feel like on Twitter, we've got a hyper-inflammatory, a high-speed, short time preference, I have to have an opinion every day or every week or every month. And that means everybody's always generating news. And they're all, if I take anybody on the world, and if I take a microscope, and I zoom in, and a magnifying glass, and I zoom in by a factor of 1,000, I'll eventually find a blemish. If you look at Bitcoin trading every week, you'll find a blemish. If you look at it every day, you'll find more. If you look at it every hour, you'll find more. If you look at it every minute, you'll find plenty. But if you zoom out to a decade or 5 years, then you'll have a different view. I really take issue with everybody that attempts to apply some statistical model. I'm not a trader. By the way, to be clear, trading is speculation, and traders see the world in short-term moves, and they're always, and maybe traders love volatility, and traders love controversy, and traders love this debate because it creates that volatility. But this is an engineering issue for me. This is the year is 1910. People are wiring their houses with electricity. And you're asking me at what point I'm going to turn my electricity off, or you're telling me how eventually people are going to get tired of electricity. And then you're telling me that wouldn't I really want to convert back to horse and buggy and manual labor to take some off the table because electricity is a scary speculative thing. And I'm like, no, it's running water. It's electricity. It's automobiles. It's not a fad. It's the future. It's not a bubble. It's capital flow. When all the money is leaving the peso going to the dollar, that's not a bubble in the dollar. That's capital flight from a collapsing asset or a collapsing currency that people have lost confidence in. Just like the stampede to the internet. Like, would you ask a company, when are you going to stop using the internet? Are you going to stop using it in a quarter because you've used too much electricity and internet? And I would say, and you're like, well, I noticed that your Facebook or your Twitter hits were going down or they weren't as high, so you just have to turn off your thing. My view is this is all just short-term technicality. And by the way, I don't think there's a single trader with all the data in the world that can predict the future. Like, for example, you're going to go and pull every line of data of every second. If you knew every trade of Bitcoin since 2010 to today, how would that be a better indicator of the future if the future is based upon things that are changing? It's like, this is the thing I said to Keith McCullough. Keith wanted to talk about quad models and correlating Bitcoin performance to the CPI and inflation and deflation, and he's crunching numbers. And just like the Fibonacci retracement is not going to determine the future of Bitcoin any more than the Fibonacci retracement is not determining the future of electricity, right? And inflation is not going to determine the future of running water. And if the economy stops inflating, or if the CPI goes up by 3 or goes down by 2, it is not going to stop a tidal wave from blowing into your beach. If you're standing on the beach and there's a tidal wave coming, the first order issue is that's a tidal wave. And you're going to tell me, well, in the last decade, all of our statistical models didn't predict a tidal wave, and or something. It's like, it's irrelevant because it's an engineering phenomena. So a trader that wants to preach to me about what they think should happen based upon 2017, in my opinion, is irrelevant, right? And let's come back to the key point. If 10 billionaires choose to buy $5 billion or $1 billion or $2 billion worth of Bitcoin each, all of your models are irrelevant. All of your history is irrelevant. It's like everything you think you know how things are going to work out. And how about all the statistics of New York City for the past decade? How relevant are they to predict what happens in New York City this month?
Right.
Not relevant at all.
Right.
So traders, I can't predict the future. The only way, trading is not a way to make money, by the way, in my opinion. The people that make all the money are people that predict the future. Henry Ford, right? John D. Rockefeller, right? Andrew Mellon. What did they do? They invented aluminum. They invented oil. They brought us cars. They brought us electricity. Andrew Carnegie brought us steel. Mark Zuckerberg, not studying some statistical model. How did he get rich? He kept Facebook stock. He didn't sell it.
Right.
Jeff Bezos, he kept his stock. So at the end of the day, none of this statistics matters. None of the trading matters. None of the volatility matters. These, people that are living in their little world, studying their Fibonacci retracements and preaching with incredible conviction about the upcoming expected 60% retracement or 80% retracement, they're overlooking this fundamental issue, which is if Bitcoin is a digital monetary network, and if enough people with money and power decide to adopt it, it's going to go up and increase by a factor of 100 or 1,000, and there's nothing you can do to stop it. And its past is completely irrelevant to its future. Right? So looking back makes no sense. The only question you got to ask yourself, Laura, is, and here's the question you got to ask: how much Bitcoin is Square Cash going to sell in 2021 on the mobile app? That's the question.
Right.
How much is PayPal going to sell?
Yeah.
Because PayPal and Square are going to obliterate everybody else's opinion about what they think should happen, right?
Yeah.
And so, like, I think that too many people in this industry have been around too long, and they're captured by their past, and everybody wants to draw on their past because they own it.
Well, no, it is true though that even when you look at certain of the analytics right now, it's we're in uncharted territory. One thing I wanted to ask you about was this was just something I didn't understand. So according to the GAAP accounting rules, your company needs to use the lowest value of Bitcoin in any quarter as the price. And if it falls below the price at which you acquired it, you have to impair the asset and write that value on your balance sheet. So I didn't understand, like, does that help you or hurt you in terms of your bottom line or like the taxes? Or I didn't really understand the implications of that.
The implications of accounting are if it's accounted for as an intangible asset, you can't write it up on a GAAP balance sheet. You must impair it to the lowest price that it traded at in the period in question. So what that means is that your GAAP asset balance sheet is not going to be as high as if you were carrying it as an investment asset. That's why in some cases it'll be more interesting for some companies to invest in it as a fund instead of buying the underlying asset, right? Because and even then, I can't really speak for how every company will account for it because every company has its own accounting treatments and they all have their own facts and circumstances, and the facts and circumstances get pretty complicated.
Okay, so that element, it sounds like that it can at times be negative for MicroStrategy.
I wouldn't characterize one way or the other.
Okay. It probably just sort of depends what happens in that quarter.
Like, I don't know what you're getting at.
Or that like it isn't always 100% negative or 100% positive.
Define negative.
I guess if you didn't, like, if you could just use the actual the price at the time of at the quarter ends. Do you know what I'm saying? Like if we were to just use that price as opposed to having to use the lowest price.
Laura, I'd rather not engage in a discussion of accounting with you. Like I can't see what the upside is of that.
Yeah, I was just trying to figure it out, but you're right. Okay, let's talk about something maybe more fun, which is, I was just curious, how has your life changed after it became public that MicroStrategy bought Bitcoin?
I engage in a bit more communication now. So I communicate on Twitter, and I communicate on YouTube, and I communicate on television more often because I think it's important to be an advocate for the industry and to explain what's going on. I think a lot of people don't understand what Bitcoin really is, and they don't understand the Bitcoin network and the emergence of a monetary network. And I think it's important to communicate and educate the world on that. So I'm more engaged in outbound communication and education than I was before.
And I wondered, so when Citi downgraded the MicroStrategy stock to sell, it also indicated that senior management had been selling MicroStrategy stock. And they wrote, quote, "We are also concerned that the company could be losing focus on execution with CEO Saylor's disproportionate focus on Bitcoin versus running the business and signs of deteriorating employee sentiment." What do you have to say to that?
Well, I don't agree. I think employee morale is good. I think the company is executing fine, and I think the shareholders would disagree with the opinion as well. But everyone's entitled to their opinion. There are some people that don't choose to own Bitcoin, and there are certain banks and there are certain entities that are more positive on it than others. So I think everybody's entitled to their opinion.
And what did you think when it was revealed that Renaissance Technologies was the third largest buyer of MicroStrategy stock since the summer?
We have various institutions that take positions in the company from time to time. And that's changing almost every quarter. So we're flattered by the support from any reputable investor, and they're all pretty reputable. So I don't play favorites. I mean, we've got a lot of really good investors that have invested in the company, and we appreciate them all.
So your stock price has gone from $123 the day before the announcement to roughly $575 today. What do you think will happen to your stock in a crypto bear market or Bitcoin bear market?
I don't know. I can't speculate. I mean, I think what happens to the stock is up to the marketplace. The market decides. Again, I think that you have this model that you think that Bitcoin is a cyclical thing like a sine wave, and that's it's an implicit assumption in the question, what happens in a crypto bear market? But if I had a model that we're going to wire the world for electricity, at what point between the year 1900 and the year 1950 did the world unwire its electricity or roll back its running water or roll back its automobiles? I view Bitcoin as a monetary network that is spreading, right? It's a bear market in automobiles. In what year was that bear market? From the point that Ford and General Motors started, right? I mean, so it's like, if you don't believe it's an industrial network, right? When was the bear market in Google? And since the company was founded, right?
Right. It's more like if stocks are reported on a quarterly schedule. I mean, I understand what you're saying because, of course, from a long time. If we're looking at a long enough time scale, then of course what you're saying is true. It's just obviously, the rhythm of stocks and quarterly reporting and all that is really different.
Well, again, speculators and traders manage to speculate about volatility and focus upon it, but investors and industrialists are more focused upon building something for the long term. And the fundamental critical issue to understand is Bitcoin is the technically superior asset in the world right now. And it's running on the dominant digital monetary network. And that digital monetary network is growing and is spreading. And there's no reason to think it's not going to continue to spread. Was there a bear market in the internet? Like at what point did it make sense for the company to worry about a bear market in the internet? Like if you were given an interview to Jeff Bezos in the year 2000, you said, are you worried about the bear market in the internet? And his answer would be, I'm building a great online retailer and we believe in the future. So I believe in the future of Bitcoin. I believe the future of a digital monetary network. And I think it's just as important to humanity as electricity and running water and the automobile and steel and communications and the internet. And it's going to grow over time. And maybe there'll be good days and bad days, but we don't do things based upon whether or not we'll be up or down by the hour, by the day, or by the week. We do things because they're the right thing to do. So if you believe that the world will benefit from a thermodynamically sound monetary network, then you're going to invest in Bitcoin. You're going to build Bitcoin into your balance sheet. You're going to build it into your P&L. You're going to evangelize it, educate the world, and you're going to look forward to the journey. And if you don't, then you won't. I think it's a mistake, by the way, for any crypto traders or speculators to fixate upon speculating and trading this thing. It's going to be like trading Apple stock in the year 2010. It's like you might buy it for $1.15 and sell it for $1.27 and brag to your friends, or short it at $1.42 and cover your short at $1.13. But ultimately, you're going to look silly if 10 years later it's trading at $120 a share and someone's going to say, so you were doing what? You were making nickels when you could have actually made 100x or 1,000x that much money by actually investing in it.
Right.
You think the people that
Plus
made
all
the money
wasted
were
time and energy.
Yeah, I mean, people shorting and trading and speculating in the short-term direction of General Electric or General Motors or Standard Oil. they're not the ones that you remember. You're reading about the people that actually, Henry Flagler, Andrew Mellon, the industrialist, Andrew Carnegie. You're reading about the people that actually invested in the future, believed in the future, fought through the difficult time periods and held out for the long run. So you could call it hodling, but how about just commitment
Conviction.
and conviction over the long term, right? And not being caught up in the near term. I mean,
Right.
that's the strategy. And I can't imagine that no employee wants to work for a CEO without conviction. No customer wants to buy from a company that's not committed. Right? No vendors or counterparties, or nobody wants to do business with anybody that changes their opinions and blows with the wind day by day or week by week. So I think there are some people that can make money speculating this way and that and trading against bear markets. That's not the business of a technology company. A technology company needs to identify new technologies and find a way to invest in new paradigm shifting technologies. And if you do it well, you'll grow and the world will be a better place. And if you guess wrong, then you suffer the consequences, and that's the free market.